Welcome to this supplemental lesson by Third Decade. We'll be discussing life insurance, who needs it, what type of policy to seek out, and how much coverage you need. To start us off, we must first understand why life insurance is important. I'm sure many of us know of someone who has passed away and had family experience financial hardship due to the unexpected loss and end-of-life costs. Depending on whether an individual chooses to be cremated or buried, the average cost of a funeral in the United States is between $6,200 and $8,300. You can imagine how many people would struggle to come up with that amount of money unexpectedly. Beyond that, many people have belongings and assets that must be distributed after their death. This would be called settling an estate. For an uncomplicated estate, these costs tend to range between $3,500 and $7,000. With more complicated estates far exceeding that. Many people turn to crowdfunding in order to help cover these costs, but help is not guaranteed, and with even a small policy, you can avoid that potential stress altogether. There are two types of life insurance that we're going to discuss: term life and whole life. Term life insurance lasts for a defined period of time, also known as the term. These policies typically range from 5 years to 30 years. They have a level premium, and they're only ever paid out if you die within the defined term on your policy. These policies are quite inexpensive compared to their counterpart, costing the average person only a few $100s per year. Alternatively, whole life insurance offers lifelong coverage as long as no premium payments are missed. The premiums tend to remain level, and these policies can build a cash value with an investment component, which allows the insured person to borrow from their own policy, although this can affect their death benefit. There are many different names that you'll see to describe offshoots of whole life insurance, such as permanent life insurance, universal life insurance, and other names that include words like variable, index, and guaranteed. Whole life policies are quite a bit more expensive than a term policy due to the combination of being an investment product as well as a life insurance product. In the vast majority of cases, Third Decade recommends that you buy a term life policy and invest the money that you're saving by steering clear of a whole life policy. Due to the high fees on a whole life policy, much of the profits that you could be earning in the market yourself are instead being eaten by the middleman. The few cases where a whole life policy may be appropriate for you is if you have a permanent dependent, such as a disabled child, who will require financial support for their entire life, or if you are someone who is already maxing out your retirement accounts and you're using one of these policies to leave additional assets to surviving family members. Next, let's talk about how to identify whether or not you need a life insurance policy. Here are some good questions that will help inform your decision. Does somebody else rely on your income, or would your absence create a financial change for the family? In the case of a full-time stay-at-home parent, you may not earn income, but you provide a service to the family worth a lot of money each month, so you may still be a good candidate for life insurance. Do you have any dependents? Do you have debts that would be inherited by somebody else in the event of your death? And does your employer offer a small plan to you already? Sometimes these are sufficient for taking care of your end-of-life expenses if you otherwise don't have others relying on your income. Like with any insurance policy, there are factors that influence the rates you are offered. Some of these factors include age, existing conditions and health history, BMI, mental health history, medication use, substance use, and assigned sex at birth. With age, the younger you are, the cheaper it is, as you're statistically less likely to die within the defined period of the policy. Existing conditions and health history. Some examples would include health issues like an autoimmune disease, diabetes, high blood pressure, and much more. Again, this is because of the statistical chances of earlier death being higher than those without any health issues. Your body mass index may also affect your premiums. A high BMI can indicate a higher risk of health conditions like type 2 diabetes, coronary heart disease, stroke, and bowel cancer. Mental health history is another factor that affects your premium. Conditions like depression, anxiety, ADHD, bipolar disorder, borderline personality disorder, PTSD, OCD, and schizophrenia also come with risk factors that make premiums more expensive. Certain prescribed medications will also affect your premiums, and if you have a history of substance use within the last 2 years typically, or you currently use any illicit substances, this may also either affect your rates or your ability to get a policy. Lastly, your assigned sex at birth will have an impact on the premiums you pay due to the fact that women typically live longer than men on average. While some of these factors may feel frustrating, it is important to disclose accurate information to your insurance provider, as they will be accessing all of your medical records to verify your claims. Another important consideration when seeking out one of these policies is who you choose to do business with. For something as important as life insurance, you want to be sure that you've signed up with a reputable company who is going to fulfill their end of the deal in the event of an untimely death. Some of the things that you'll want to research about a company before signing on with them includes their ratings and financial background. You'll want to make note of your customer service experience with them and seek out personal testimony from others on the internet who can speak to their experiences with their customer service as well. In general, you can see what their reputation is online. Make note of your experience with their salespeople. Do they listen to you? Are they pushing products that you aren't asking for? And of course, you'll want to be sure if they offer the type of policy that you're looking for. Lastly, you'll want to compare a few identical policies with solid companies and assess how their premiums compare to one another. That's not to say that you should always choose the cheapest option, but it may help you to make a decision that balances the quality of your experience and confidence in the company with the rates that they offer. Each person's life insurance needs will vary depending on a variety of factors. We'll cover some examples in each of these categories. For debt, you may choose to include the ability to pay off outstanding debt in your policy, if you have any. This could be anything from a mortgage to credit cards, auto loans, etc. One thing to keep in mind on this line item is that federal student loans do not transfer to a surviving spouse. However, private student loans might, so it's important to understand your situation before settling on the amount of a life insurance policy. Your income is another factor that should be taken into consideration. Someone who only contributes 30% of their household's income won't require the same size policy as somebody who contributes 70% of their household's income. Whether or not you have dependents is likely to influence your decision on whether or not you get one of these policies as well. Even some married couples may opt not to have life insurance if they would both be able to cover their expenses in the event of the other's death. However, adding children into the mix does increase the financial burden and make it much more likely that you'd benefit from having a term life insurance policy in place, at least until that child is old enough not to financially depend on you anymore. Financial goals could be a multitude of things, but a common one that people incorporate into their needs for one of these policies is the ability to pay for the education of their children. Anything that you would like to accomplish financially within the term of this policy is something that you could build into the needs analysis. End-of-life costs, as we discussed at the beginning of this module, can add a financial burden during an already challenging time. It's a good idea to set aside a chunk of one of these policies just to cover funeral and burial or cremation expenses. Lastly, the adjustment period. Most people need to take time off of work in order to recuperate following the death of a loved one. Especially for a loss like that of a spouse, someone may choose to take a significant amount of time off. Thankfully, by incorporating this into your policy, you could afford your surviving spouse a generous adjustment period, perhaps even a year or longer. On the next slide, we'll point you to a calculator that we've developed that takes each of these things into account and helps you determine exactly how much life insurance you need. If you determine that one of these policies isn't really necessary for you due to having sufficient savings to cover your end-of-life expenses, you may instead choose to use a payable on death account. This is a bank account that automatically transfers to a beneficiary when the account owner dies. The benefit of this type of account, as opposed to a typical savings account, is that your beneficiary would receive these funds without the delay of probate. In order to start your own calculation now for the amount of term life insurance that you need, click the words above or scan the QR code with your phone. This spreadsheet was developed using many of the same calculations that a financial advisor would use to help determine the size of a policy. Read the instructions on this spreadsheet and then fill out the fields accordingly to help determine your life insurance needs. Lastly, here's a simple online life insurance calculator from Bankrate, as well as a link to help you view the ratings of the 25 highest rated life insurance companies. We hope you found this supplemental lesson on life insurance helpful as you navigate your own financial planning.